In this video, we will look at the star pattern. This is a daily time frame chart of Adobe. A lot of people do not understand the proper definition of a star pattern. Let me explain that. A star is a single candle pattern. Okay, this is the star. It has a small real body. Okay, and it can be any color. Important thing about the star is it gaps away from the prior tall real body. So the candle prior to the star should be a tall real body. Okay, and the star should gap away from that. Gap away means the real body should not touch. The shadows can touch. In this case, even the shadows are not touching. There is a rising window here. But if this candle had a shadow like this, the shadows can touch each other, but the real body should not touch. That's the main condition. And this is a reversal pattern. Reversal means after this pattern, the price can either go flat or downwards. The chances are the price will go up from here is very low. However, on this candle, you are not allowed to initiate a new position. You can take a short position at a dark cloud cover or a evening star pattern or the hanging man if you get the confirmation. Okay, but this is not a pattern where you would initiate a position. This pattern is generally used to exit or take a partial exit if you are already long. So if you bought the stock here and you see something like this, you should either take an exit or a partial exit here. And if you don't do that, look what happens. It's a very powerful reversal pattern, and the reason why that happens is because you can immediately see the shift in market psychology. Although this is a higher close than the close of this candle, the problem is the height of the real bodies. On this, the market was very bullish. On this real body, the market doesn't seem to be bullish. It seems to be losing. The bulls seem to be losing their force in this market. And when the bulls are becoming weaker, what do you think happens to the price? The price should go down. But remember, you can't initiate a position on the star. You can either exit or partially exit. It's a reversal pattern. The shadows really do not matter. What's important is that real body. Now this is appearing after a trend. Okay, every candle should have a prior trend, every candle pattern. The same thing can appear in a downtrend. Let's say there is a downtrend and you have a small real body which gaps away from a prior tall red real body. Okay, that is also a star. Okay, this is, let's call it a northern star, let's call it a southern star. But if you compare the strength of the two stars, the northern star is very powerful in terms of probability of reversal. The southern star is not as powerful as the northern star. So on the top of the market, when you see a star, you should become very cautious. And these stars are part of patterns. Like for evening star, the second candle is a star. For morning star, the second candle is the star at the bottom. Okay, and this candle is something which I have discussed in detail in level 2, I think, of my Japanese candlesticks trading mastery program. It has multiple levels. As of this recording, there are total 18 levels in the program. So very, very detailed. Level 1 itself is 14 hours of training. So you can imagine 18 levels. There is more than 1000 chart examples in that program. So go do that program. It will help you in your trading.